So the other big story this morning, the markets, they are rebounding this morning after yesterday's massive global sell-off. The Dow dropped more than 1,000 points and the S&P lost 3%, the worst session since September of 2022 for both. The sell-off started in Japan with its market posting the worst day since 1987, which had a ripple effect around the world. But that index recovered significantly today. Despite yesterday's losses, the Dow closed about 7,500 points higher than when Donald Trump left the White House on January 20th, 2021.
Hold on. What did you say? Could you read that again?
Higher than when Donald Trump left the White House on January 20th, 2021.
So you're saying right now, even after the bad day yesterday,
the Kamala crash, they're calling it.
That Donald Trump's calling it 7,500 points higher than when Donald Trump left office. So people are that much richer that are calling Biden and Harris socialists. So can I just, if they're keeping score at home,
go ahead.
Stock market is 7,500 points higher than it was when Donald Trump left office. Also, illegal border crossings
we're going to go there.
Are lower now than they were when Donald Trump left office. That's all I got to say for now. It's pretty fascinating what a great job Biden and Harris have done, and I'm looking forward to hearing about it on other right-leaning networks.
Well, no matter what the actual facts are, Donald Trump was very quick to blame the drop on Vice President Kamala Harris in a series of social media posts and later in a campaign ad. Trump branded the meltdown the, quote, Kamala crash. He also claimed the country is heading into World War III and another Great Depression
this year. He got the number right.
Wow. In a statement responding to those attacks.
I was afraid he was going to say we're about to go into the Spanish-American War. He kind of sometimes he's a couple of wars behind.
In a statement responding to those attacks, a Harris campaign spokesman wrote in part, quote, what middle-class families need is steady economic stewardship, not chaotic ranting lies. Donald Trump had the worst jobs record of any modern president and oversaw some of the worst days in the stock market in history, while spending his presidency lining the pockets of his wealthy friends who shipped American jobs overseas. And he even announced that in a phone call at Mar-a-Lago. Just called them up and said, I got you guys your tax cuts on camera in front of everyone.
Made a lot of people rich.
Super appropriate. Now, despite blaming Kamala Harris for yesterday's stock market plunge, Donald Trump has spent the better part of the last 3 years taking credit for Wall Street's gains under the Biden administration. So which is it really? Fox News host Neil Cavuto yesterday called out Trump for trying to have it both ways.
The Donald Trump thing in the market amazes me. When they're up, it's all because of him and looking forward to him. When they're down, it's all because the Democrats and how horrific they are. Yet some of our biggest point fall-offs, 3 of the biggest of the top 10, occurred during his administration. Now, a lot of those were in the COVID years. I get that. But, you either own the markets or you don't. It does confuse me. I keep a very, very close look at all the records here, sell-offs and otherwise. 3 big ones, the 3 biggest among them in history of the markets occurred during the Trump administration. Not all on him, but they did occur under his watch. So just want to remind you of that.
Wow, 3 of the worst days in Wall Street history happened under Donald Trump.
I think it's a very fair assessment, especially if you keep track of things like this. Joining us now, the anchor of CNBC's Worldwide Exchange, Frank Holland. Frank.
All right, Frank. So we've seen the Nikkei rebounding 10% overnight. What are we expecting when the Dow opens up in NASDAQ today?
Well, good morning, Joe and Mika. You know, we have the futures, of course. We are seeing a bit of a modest bounce back on Wall Street this morning when we're looking at the futures. I'm taking a look right now. The Dow looks like it would open up over 100 points higher. The S&P and the NASDAQ about 0.5% higher in the pre-market. And, of course, you guys already talked about it. Yesterday, the markets had their worst day in nearly 2 years. The futures give us an indication that we could see a rebound, but it's important to note, and something a lot of U.S. investors are watching, that's European stocks. They open higher, and then they turn negative. That sentiment, it sometimes crosses the Atlantic and weighs on the U.S. markets, certainly something that a lot of people are watching. You guys also talked about this. We're saying that the U.S. seeing kind of a modest bounce back. Well, Japan, huge bounce back over there. Yesterday, the Nikkei had its worst day since October of 1987, that so-called Black Monday crash. Today, best day since October of 2008, up 10%, best one-day point performance ever.
Wow, that's
okay.
That is fascinating. Talk about, Frank, there are a lot of different things going on, but you've had some of the sages of Wall Street saying for some time that the value of stocks have been overpriced. How much of this do you think was just a correction waiting to be had? Because some stocks were just, according, again, to people who actually know about this stuff, just overinflated.
Well, you know what? It's a multifaceted issue. Number one, we saw mega cap tech earnings like an Alphabet disappoint somewhat to investors. It was really just one data point in the Alphabet earnings. It was YouTube ad revenues that caused that stock to slide. Then we saw Amazon come in weak guidance. That's what they say they expect to see in coming quarters. And they also talked about the weakening consumer. That kind of spooked the markets. And then we saw the jobs report come in lower than expected. Unemployment go up just a bit, not historically high, but go up a bit from where we've seen it recently. And a lot of people started getting worried about a slowdown in the economy and also possibly a recession. Now, I want to go back to your main question about valuations. All year long, people have talked about mega cap tech stocks being overly valued, high valuations, lofty, frothy, some of the words that people use. But that wasn't an issue until recently. A lot of people think that those stocks got to the point they rose so much they were essentially priced to perfection. That's something that you're going to hear on CNBC a lot. Basically, any small issue in those earnings reports and you were going to start to see a sell-off. Also, we've seen a rotation. A lot of people expecting those Fed cuts coming up in September. A lot of people rotating into more rate-sensitive sectors. We're talking industrials, financials, materials. And, of course, in some cases that you have to sell some of those winners to buy into some of those other stocks. So it's a lot of different factors leading to that sell-off when it comes to mega cap tech.
All right, CBC's Frank Holland. Thank you so much. Greatly appreciate it. Great to see you, too. And Katty Kay, we will be waiting to see what happens with the market. It is also, obviously, a lot of people in the political world concerned about how that's going to possibly impact the upcoming race. But a lot of twists and turns between now and November.
Yeah, I mean, look what's happened over the last 3 weeks. If we think we're going to be able to judge today what's going to be happening in 3 weeks' time, I think we've all had a lesson in hubris over the last month. If an interest rate cut comes, that could be good for Kamala Harris. If it comes in September, it could be good for Democrats. The likelihood of that actually trickling down to make an impact into people's pocketbooks between September and November, most economists seem to think is pretty slim. It takes longer than that. But stability is what most voters will look for. If this volatility continues till November, that could be a problem for her. If it stables out again, people will forget these blips.